To break all that down, we're now joined live by Max Keiser, host of the Keiser Report. So, did you see any of this coming? The New York Stock Exchange being paused for 15 minutes, the worst day for the market since 2008. Was this expected?
Well, sure. Anyone who's an observer of markets could see this coming. This is basically a flock of black swans, and they've all collided. And they're dropping out of the sky as if the black swans are made by Boeing. They're just dropping out of the sky. You've got three major planks of this black swan collision. You've got the credit bubble blowing up again. This is part two of the 2008 financial crisis. So 2008, what was decided was bail out the bankers by expanding their line of credit so that they could continue to do all the bad things they were doing that led to the crisis, but do it 10, 20, 30 times bigger. This was going to be a problem, and now it has blown up. As anyone that Keiser Report's been predicting this now for several years. It's if you just give the same bad guys a bigger credit line to do the same bad things, they'll result in the same bad outcome. Number two, you've got this Russia oil market. You know, it turns out Russia's got the best hand at the geopolitical oil game. Russia's cost of energy is about $7 a barrel. Okay, Saudi Arabia is close to $3 a barrel, but Russia's got no debt, and they've been buying gold. And they're very well positioned now to go into a very prolonged battle for supremacy in the oil world. Meanwhile, USA and America, their cost is closer to $50 a barrel. So they are going to be blown out. If you looked at the bond market for the shale industry, the frackers, it was absolutely decimated. This will be the complete evisceration of the American shale industry. It's going to need a massive bailout and a massive money printing, but it still won't survive. And then number three, you've got the coronavirus, which is basically the boomer plague. The coronavirus attacked 60, 70, or 80-year-olds. With all the wealth that they've accumulated during the boom years, that's all going to be inherited now by the millennials and the Gen Z, because the coronavirus somehow attacks 60, 70, and 80-year-olds, but leaves the 20 and 30-year-olds completely healthy. So this is some kind of boomerang effect concocted in some millennials' basement to somehow get back at the boomers for stealing all their money and encumbering them with all that student debt. So I guess the karmic wheel is turning in favor of the millennials with this.
So we've got a bit of a perfect storm here. How long do you see this continuing? Was today just the deepest, darkest day, or is this going to fizzle out, or are we going to continue to see this economic turndown?
Well, I think we're going to see a prolonged contraction in markets around the world. The U.S. dollar, I think, is going to suffer gravely, and we're going to see a new global unit of account emerge, but it won't be the U.S. dollar, because the U.S. dollar after World War II was really the global unit of account. And in the 70s, they made that bargain with Saudi Arabia to create the Petrodollar. And that's been the story now for 40, 45 years. But that's now over. Today is the end of the petrodollar. We're going to see the rise of the ruble dollar, or the Chinese, Russian-based, oil-based dollar. It's going to be outside of America. America as the center of the world reserve currency, I think, is finished. So that's number one, and that's going to take several years to play out. Number two, the stock markets around the world are hyperinflated by companies buying back their own stock with free money from the central banks. Once liquidity freezes, and it's freezing once again, you're going to see earnings emerge to reflect the actual performance of these companies, which means a markdown of 40, 50, 60% for stock markets. You know, it's amazing because the stock market in America, the Dow Jones, which is got as high as 29,000, it could trade down to 8,000, and it would still be in a long-term bull market. That's how overinflated the stock market is. The energy market, you're looking at oil now trading in the 20s. The comments out of Russia were that we can hunker down and we can deal with $25 a barrel oil. And they're ready to go into the trenches on this. And they've got no debt in Russia. They've got a lot of gold, hundreds and hundreds of tons of gold. And they're ready to tango. They're ready to hit to go big time here. This is Russia's big play. right now. They bust a move right now. So this is going to be the year of Russia, I think.
Some analysts are saying that the Saudis were playing a high-stakes gamble. Is there any way, any hope of them winning this game of chicken, essentially?
No. Saudi Arabia is not going to win this game of chicken because they've got too much debt. Look at what happened they took Saudi Aramco, their biggest enterprise, public recently at close to a $2 trillion valuation. That's now trading below the initial public offering price. It's going to trade below half of what it once was in terms of valuation, and that entire economy is shrinking. All the pegs in the Middle Eastern world to the dollar are going to come unglued. Those pegs to the dollar are going to be reset, and that means incredible economic distortions and disruptions all over the Middle East. The Middle East has opened a can of whoop ass, but they don't know. It's stupidly, I might add, because they're not going to win this game of wits at all. They're ill prepared for this.
There's two sides to every story, of course, and while some have accused Russia of starting an oil price war, Moscow says that they really didn't have an option, that the OPEC deal just wasn't a profitable offer. Do you think that that's the truth?
It is, in substance, the truth. It makes no economic sense. The economic policy advisors in Russia looked at the numbers and they said, this doesn't make any sense. And we don't operate from a place of charity. We're not here to subsidize the American shale industry, especially since America has been onerous with the sanctions and all the bad mouthing and all the propaganda against Russia. Russia's saying, look, the numbers don't add up, and we consider you our partners, but we're not going to charitably subsidize the American shale industry for you. No, we've been very prudent. We've paid down all of our debt. We've been buying lots of gold, and we're going to approach this purely as economists in our own interest. And that's the prudent thing to do. And the profligate debt mongers and Saudi Arabia and America are in a really bad position at this international oil poker game. And I think Russia's holding three aces.
So do you think it's then going to be Saudi Arabia who's hit hardest by this price war?
America will be hit hardest by the price war because, at least in the Saudi Arabian kingdom, it's an autocracy, and they can insulate themselves from the rising, maddening crowds to some degree. In America, it's chaotic. It's unmanageable, and nobody is prepared for this. Look at the coronavirus. You have Donald Trump, who's pretending that it's inconsequential and shaking hands with people and exposing himself to the virus, as are many people in the political class in America, completely unrecognizing that this is a grave risk to have exposure to this virus that, once it gets into the lungs, can cause tremendous problems to your physical health. And so they're not prepared at all for what's coming in the next couple of weeks. And I think they have the most to lose. It's the most leveraged economy. And the U.S. dollar, once it loses its place as world reserve currency, and I think that's going to happen now in the next few months, you're going to have an enormous dislocation in the economy in the U.S., where suddenly all of that, what's called the seigniorage, the privilege of having the world reserve currency, disappears, and you end up suddenly finding yourself in a second world country, and you're no longer in the first world country.